Today's topic is business expenses versus personal expenses. Business or pleasure? All right, so what qualifies as a business expense? So the IRS does have some guidelines surrounding this. It needs to be three things: ordinary, reasonable, and necessary. And obviously ordinary, necessary, and reasonable for the running of your business, not for your everyday life, right? But what does that actually mean, and how is that applicable? So a reasonable expense, it's easier to see what is unreasonable instead of reasonable. So an example I like to give is booking a private vacation to Hawaii on the company credit card. That's not a reasonable business expense for running your business. It just doesn't work that way. Now, how about a Costco run for the office? You're getting some coffee, maybe some printer paper, and you throw in a steak and a bottle of red wine for yourself, and it all goes on the company card. Is that reasonable? Sorry. Nope, it is not reasonable. But if that steak and that wine was actually used for a company potluck, we would then say it is reasonable. So we covered reasonable. Next is ordinary. Now, ordinary is a little bit more subjective, and it really depends on what you do. So what if you are a therapy practice and you have a therapy dog, a licensed therapy dog? Would your pet food be a ordinary business expense? Well, if you have a licensed therapy dog and your dog comes to the office each day and helps with your clients, providing services to your clients, then we would argue that your food for your pet food for when they're at the office is deductible. One of the things to think about, though, is it does depend on your practice. So what if you're a therapist and you have a dog? Your dog's not a licensed therapy dog. Your dog's just your dog who drools a bit and barks loudly. Okay, food for that dog is not going to be deductible. All right, so we've covered reasonable, ordinary. Last but not least is necessary. So one of the things we do ask is this truly necessary? So there isn't a solid line here that dictates if something is necessary or not. Again, it's easier to come up with some unnecessary expenses than it is a necessary expense. So gaming PC at a car dealership, that's not necessary. Very easy one there. Not at all. The flip side of this is if an expense could be considered appropriate and helpful, then there's a good chance the IRS would agree with you. So a massage therapist set up in your break room for the busiest time of your year, and all your employees get to go to the massage therapist for free. That could totally be appropriate and helpful. Of course, it depends. Are you paying for it? Are your employees paying for it? That all comes into play. Now, the last part of this, since we've already covered now reasonable, ordinary, and necessary expenses, is it connected to earning income in any way? So does this expense help you earn income for your business, either directly or indirectly? Now, this isn't an end-all argument here. This is a very gray area, and we do always ask our clients for documentation. So make sure you keep your documentation for your expenses that you have for your business. There are a couple things that are just no, do not pass go, no. One of them, commuting expenses. So your trip from your house to your office, not deductible. Commuting does not count. Work uniforms. So let's say you buy some really nice shoes, you buy a really nice button up, maybe a jacket, and can you deduct that for your business? Unfortunately, not. Usually work uniforms are something you wouldn't use for anything else. Say a nurse's scrubs, you wouldn't wear those to the grocery store on a daily basis. Those are a work uniform. If you require everyone to have a branded t-shirt with your brand across the front and the back that they wear to work each day, that would be deductible. You dressing fancy in some nice business clothing, that's not a deduction since you could then use that clothing outside of work. The next one would be gifts. You can only deduct up to $25 per client per year. The exception to this is branded items, so you give away sunglasses or pens, things like that that say, that are stamped with your company logo. Here's a mug from TLDR Accounting, that's an exception. And then the last one is bribes. Bribes are not tax deductible. Nope, do not pass go. Doesn't matter if the country you're working in, it's completely normal for a bribe. IRS, no bribes. Don't do it. Not worth it. They're just not deductible. You might need it for your business. I don't know. It's not deductible. And then lastly, the big thing about business and personal expenses is they don't go together. Do not mingle them. So your business expenses should be run through business bank accounts, business credit cards. Personal expenses should be run through personal bank accounts and personal credit cards. Do not mingle them. When you mingle personal and business expenses, you can get into trouble and it's just no go. So step one, always keep business expenses in the business credit card, the business banking account. You're all good, right? And then make sure you keep documentation for these expenses. So anything over $75, you really need to keep a receipt for. It's up to you to keep your receipts. Making sure you have that on file, saved in a folder on your computer, fantastic. It's one of the things that you are required to keep. We don't always ask all of our clients for receipts for things. We don't want your receipts, but you are supposed to be keeping copies of your receipts. Now, I get asked, what about my credit card statement? It shows I bought this, this, and this. There you go. No, your credit card statement by itself does not give any information on the item you bought. All it says is you spent $700 at Apple. Not that you bought a phone, not that you bought, a monitor. It just says $700 in Apple. That is not a valid receipt. So if you spend over $75, keep the receipts. Just take a picture on your phone, upload it to your filing system. Super easy. All right, so what did we cover? We covered that there are 3 things you need for business expenses. They need to be reasonable, they need to be ordinary, and they need to be necessary. And then some follow-up questions you can ask yourself is, does this expense help me earn income for my business, either directly or indirectly? And then does it hit any of the things that the IRS does call out directly, like commuting expenses, work uniforms, gifts, and then bribes? All right. That was the TLDR on business and personal expenses.